Welcome to Option Strategies. In this video, we want to talk about how options are priced. It is important for an option trader to understand what affects the option price because the understanding can help the trader decide the best strategy to trade the option based on the trader's assumption about the stock. The factor that influencing the option price are the stock price, the time until expiration, and the volatility of the stock. The relation of the stock price with the option price is considered as intrinsic value. The intrinsic value is the value of the difference between the stock price and the strike price. Let's look at an example. This is the Apple option chain at September 4, 2021. The Apple stock price is $154.30. The call option price of $152.50 strike price at September 17 is $3.60. For this option, the intrinsic value is the stock price $154.30 minus the option strike price $152.50, which is $1.80. The $152.50 strike price call option is considered as in the money because the strike price is lower than the stock price, which means the call option has intrinsic value. The $1.80 considered as intrinsic value because it is a profit that the call option buyer can make by buying the Apple stock at $152.50 and sell it for $154.30. All call options with strike price lower than the stock price have intrinsic value. If the call option buyer buys the $155 strike price call options, the option price only consists of extrinsic value and has no intrinsic value because no trader will want to pay $155 strike price for the stock that only costs $154.30. Hence, the $155 strike price call option or any call option with strike price above the stock price are considered as no intrinsic value. In contrary, if a buyer buys a $155 September 17 put option by paying $2.87, the intrinsic value of the option is $155 minus $154.30, which is 70 cents. For put option, the option has intrinsic value if the strike price is higher than the stock price or when the strike is in the money. The intrinsic value of an option price will move with the movement of the strike price. For the call option, if the stock price goes up, the intrinsic value will increase. When the stock price goes down, the intrinsic value will decrease. The opposite is true for the put option price. When the stock price goes up, the intrinsic value will decrease. And when the stock price goes down, the intrinsic value will increase. Besides intrinsic value, the rest of option price is known as extrinsic value. The extrinsic value is a speculative side of the option price. Three components of extrinsic value are the time value, time to expiration, the strike price distance from the stock price, and implied volatility. Now let us look at time value or the amount of time left before the option expires. While trader can hold the stock indefinitely, option has an expiration date. The longer the time that an option has before expiration, the higher the time value. Because the more time for the stock price to move above the strike price of the call option or below the strike price for put option. We can see the time value difference by looking at the same strike price option but with different expiration date. This is the Apple option chain as of September 4, 2021. You can see that the $155 call option at September 17 is priced at $2.14, while the $155 call option at October 15 is $4.45. The September 17 call has 13 days until expiration, and the October 15 call has 41 days until expiration. The time value of the 28 days difference is $2.31. Similar time value difference can be seen on the put option too. As we can see, the $150 put at September 17 is priced as $1.05, while the $150 put at October 15 is $2.93. The time value of the 28 days difference is $1.88. The second component of the extrinsic value is the strike price distance with the stock price. The closer the distance of the strike price with the stock price, the higher the value. Once again, let us look at an Apple option change. The extrinsic value for the September 17 $150 strike price put option is $1.05, while the extrinsic value for the September 17 $145 strike price put option is 49 cents. Finally, let's look at implied volatility. This is also the most important component of option price. Volatility is the measure of how much the stock price will move. Stocks are considered volatile if the stock price moves up and down in a wider range, and stocks are considered less volatile if the stock price moves up and down in a narrow range. Implied volatility is the measure of current market price of volatility for an option. An option with higher implied volatility, or commonly called IV, is more expensive than the same option when the IV is low. IV is a measurement at a moment, hence an IV rank is used to measure the relativity of current IV against the past year IV. At the Apple option list, we can see the current Apple IV rank is 11.9, which means current IV is at 11.9% from the low point compared to the last 12 months IV. So as a summary, option price consists of intrinsic value, which is also affected by the stock price, and extrinsic value. The three components of extrinsic value is time value, time to expiration, the strike price distance from the stock price, and the implied volatility. Thank you for watching, and I hope you liked the video. Please subscribe.